I want to talk to you today about the importance of record keeping when it comes to developing your investment portfolio. Of course, the reason you develop an investment portfolio, the reason you maintain, do all the work connected with it, is because you want to have a profit. Ideally, when you retire, a passive income stream that you can enjoy into retirement. But anytime you earn any kind of profit, whether it's wages or whether it's revenue coming in from rent, the government expects a portion of it in the way of taxes. And obviously, if you can, you want to reduce that tax burden. When we're thinking of rental income, we think of gross rent, which is all the rent comes in, and we think about net income, which is your gross rental income minus legitimate expenses. And there are legitimate expenses that you can use to reduce your tax burden. And we want to take advantage of the ones if we can. First of all, there's all the operating expenses. And when we think about operating expenses, we think about heat and hydro and water. We think about insurance. We think about taxes, things like that. We also think about the costs of the mortgage. And when I say the cost of the mortgage, I'm not talking about your mortgage payment. Your mortgage payment is made up of more than one component. There may be a tax component. There's also an interest component, and there's a principal component. And the principal is deemed to be income as far as Revenue Canada is concerned. It's the interest portion that you can declare against other income. And so the amount of money you're paying interest is important as an expense. But there's also an expense category called repair and maintenance. And that's where it gets a little bit complicated, because repair and maintenance can be divided into two categories. They can either be an expense or they can be a capital cost. And an expense is handled very differently than a capital cost. Let me start by explaining that. An expense can be used dollar for dollar to reduce your income down to your taxable income. But a capital expense or a capital cost cannot. A capital cost has to be added to the acquisition cost of the property and has to be depreciated. So let me talk to you about the various types. If we're talking about an expense, a tenant calls you up and a tap stripping, you call a plumber. That's an expense. A tenant moves out and the carpet is badly damaged, stained, you can't clean it, and you have to replace it. That's an expense. The property needs to be painted inside. That's an expense. On the other hand, you decide to build a garage on the property. That's a capital expenditure. You decide to put a deck on the back and there wasn't a deck before. That's a capital expenditure. And so usually it's the size of the cost, but it's also whether or not you are improving the property with something that wasn't there before. If there was no air conditioning on the property, you added air conditioning, that's going to be a capital expenditure. If there's an air conditioning unit and it went and had to be replaced, same as a fridge had to be replaced, you can argue that that's an expense. Now, you want to get your accountant involved because it's very important you don't get too aggressive and bring an audit on yourself. But that's a general rule of thumb. So let's take a look at how they're handled. If it's an expense, we take our income and we subtract it from the income to get our net income. If it's a capitalized item, then we have to depreciate it. And to understand that when you acquire a property, the government allows you to depreciate that property at a certain rate every year and show that as a loss or as an expense, minus the land value. Let me give you an example. Let's suppose you buy a property for $600,000, and let's suppose $200,000 of it is attributed to the land value. So you've got an improvement value of $400,000. If the rate of depreciation is 4%, that means in your first year, you can depreciate by $16,000. And so now your acquisition cost, or your base you work from, is going to be $384,000 because the $16,000 has been taken off. If you spend $20,000 on a deck, and if somehow you can expense it, you can take that whole $20,000 and reduce your income tax burden by $20,000. If you have to add it to the acquisition cost and depreciate it, you're only going to get $800 as a write-off, but you're going to get that year after year on that depreciated amount. So Immediately, it's an advantage to be able to expense it rather than capitalize it, but you can't do it. You have to be very careful about which one you put in which category. And then, of course, there's the issue of recapture. When you sell the property, or if you pass and your estate takes over the property, and that's deemed to be a disposition, you have to first of all pay back recapture. And what that means is any amount you've depreciated when in actual fact the property is worth more, dollar for dollar, you're going to have to repay that depreciated amount. And then from the acquisition cost to the sale price, that's going to be a capital gain. And at the moment, you're taxed at 50% of that. So you take the capital gain, divide it by 2, and add that as profit. Either way, whether the tax is deferred or whether the tax is payable in the current year, the government's going to get their money one way or another. But it's to your advantage to defer it if you can. That's not the only reason, however, that you want to keep accurate records. Most of us forget items over time. And once you get 6, 8, 10 properties, it's going to get confusing. You know you replaced a fridge, but you can't remember which unit you put it in, or a stove, or replaced the carpet. And it's handy to know. It's handy to know how long this fridge has been in the unit, whether it's a reasonable amount of time or whether it isn't. And especially if a tenant leaves and you have to touch up the paint. If you know the paint color you put in there, then you can touch up. If you don't, you have to paint the whole unit. So it's a good idea to keep a log on each property, and in these logs, keep track of the items that you spent, whether it's fridge or stove or carpeting, and the color paint and the code number on each apartment. And then you've got that record. There's a third reason why record keeping is very, very important, and that's accountability for the tenant. Whenever a tenant leaves, you go through the property and often you discover damage. It may be a chip in the porcelain of the tub. It may be a stain in the carpet that can't be removed. It may be a ripped screen, perhaps. If you go over these with the tenant, they will invariably tell you it was that way when they moved in. By keeping a record of the condition and holding the tenant accountable, you diffuse that argument. It's like when you rent a car. When you rent a car, they have a sheet and they go over it with you and it shows any scratch or ding or dent on the car and they have you sign it. When you bring the car back, if there's any new scratch, ding, or dent, you're held accountable. And it's the same thing with the tenant. You bring out that sheet when they leave and you say, no, this was here, this was here, this wasn't. It holds them accountable, but it also is in the back of their mind, and they're apt to be just a little bit more careful while they're in the unit, knowing there's a day of reckoning coming. So record keeping, very, very important. It's very important for your tax burden. It's very, very important for your ongoing repair and maintenance, and it's very important in terms of holding a tenant accountable. I want to thank you very much for investing your time in this video. I look forward to talking to you again next week.